Today on the Blockchain Report, Bitcoin's holding around 110K while the global economy throws a full-blown tantrum. As Donald Trump declares, we're in a trade war with China, and it hits miners with 57% tariffs, and he calls it national security. Meanwhile, the CIA gets clearance to go covert in Venezuela because nothing says stability like secret wars in oil. In gold, it's an all-time high of $4,200 an ounce, and boomers are lining up to buy shiny rocks while Bitcoiners quietly remind them you can't email gold. All that and more on today's show. Let's go. Good morning, my digital dreamers, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from the beautiful and overpriced San Francisco, California. It's Thursday, the day you start pretending you're being productive, but your brain already switched to weekend mode 3 tabs ago. Now, before we dive into today's chaos, do the thing. Hit that subscribe button and make sure you're following RoxomTV and yours truly at Hank at RoxomTV. Because hey, if your financial strategy still involves vibes and vibes alone, your net worth's about to get liquidated faster than an FTX customer refund. All right, we got a lot to talk about today, so let's jump into the headlines of this morning's bull run. Let's go. All right, well, it is time for this morning's bull run, and we got a lot to talk about today. And we got 2 guests joining us in the studio, so a lot to look forward to as well. Let's get into it. First up, the U.S. is officially in a trade war with China. Great. After threatening 100% tariffs on all Chinese imports, President Donald Trump told reporters, quote, "Well, we're in one now," and said tariffs are national security. Or in other words, we're broke, but let's make it sound patriotic. These tariffs already wrecked markets last week. Bitcoin dropped from 121K to 102K in just a few hours. Now it's recovered, proving that the only thing more resilient than Bitcoin is Donald Trump's ego. Treasury Secretary Scott Bessent backed him up, saying China's disappointing actions will hurt them more than us, which is true, except it's also now 60% more expensive to buy Bitcoin mining rigs made in China. That's right, miners are getting hit with a 57% tariff. Machines from Indonesia, Malaysia, and Thailand, 21%. Even worse, Customs has been seizing mining rigs under the impression that they're illegal radio devices. Still, no major miners have left the U.S., probably because where else are you going to find cheap energy and bad policy so perfectly balanced? And the CIA is set to carry out covert operations in Venezuela. According to U.S. officials, the order gives the CIA permission to conduct lethal operations and covert actions against Venezuelan leader Nicolas Maduro. It's the latest step in what the administration calls a pressure campaign and what historians usually call a prequel to a mess. Trump told reporters the U.S. is looking at land now because we've got the sea very well under control. The U.S. military has already been targeting boats off the Venezuelan coast, allegedly used for drug smuggling, killing 27 people. And now the Pentagon's drawing up potential ground strike options for Trump to consider. 10,000 U.S. troops are already positioned in the region. Meanwhile, Venezuela's government is accusing the U.S. of violating the UN Charter and said Washington's real goal is seizing their oil. And while the headlines scream regime change, investors hear something else: instability, uncertainty, and inflation risk. All right, joining us today for our bull run, we have one of my favorite guests and my favorite Joe from Zimbabwe in the whole world. We got Joe Apple from Zappo Bank joining us in the studio today. Joe, how are things on your side of the world, my friend? Always great to have you on the show. Thanks for joining us.
Hank, I'm so glad to hear I'm your favorite Zimbabwean called Joe. I was worried there was another one, but I'm reassured now. Things on the side of the world are peachy. I mean, what could go wrong in this day and age at this time of our lives?
Yeah, that's a nice way to put it, especially considering the volatility we've experienced in the last week or so. But it looks like we're on the upswing, and we're going to chat more about that in just a second as we get into today's stories. So you ready to rock and roll, my friend?
Let's do it.
All right, first up, So gold, in case you haven't been paying attention, is glittering at an all-time high of $4,200 an ounce, and the world's having a full-blown boomer moment. Lines are forming outside bullion shops like it's Black Friday at Costco. Let's take a look here. You can actually see in Sydney, people waited 200-foot line to buy shiny yellow rocks because they don't trust the dollar, the banks, or probably their own reflection. Gold's up 61% this year, overtaking U.S. Treasuries and global reserves for the first time since 1996. That means central banks now trust metal more than the world's largest economy. But hey, you can't really blame them. One of those things actually holds value when you turn the lights off. And while gold, silver, and Bitcoin now rank among the world's 10 largest assets, Peter Schiff is out here doing victory laps. He says Bitcoin's recent dip proves the bull market is over. Right, because losing 8% during a market crash while gold spikes is apparently failure now. Bitcoin briefly dipped to 102K after that $19 billion liquidation event last week, but compared to altcoins that crashed 95%, that's like walking out of a car wreck with perfect hair. Gold's having its moment, sure, but let's be real, you can't email gold, you can't divide it into Satoshis, and you definitely can't trade it on a lightning node while standing in line at a bullion shop. So congrats, gold bugs. You win this round, but when the lights go out, my portfolio's still running on self-custody. All right, bringing Joe back in. Joe, gold is at a record high of $4,200 an ounce. People are lining outside of bullion shops like it's a Taylor Swift concert. Are investors playing it safe, or are we watching collective boomer nostalgia in real time? What do you make of this?
I think it's pretty fascinating. I mean, you see those lines of people literally lining up to buy gold, like the world is ending, and you start to wonder, is it? But to be fair, I mean, I think it is. It's a degree of boomer nostalgia mixed with the state of the world and the macro economy that we're in right now. There is a lot of uncertainty. People do feel like there's a lot of risk, and so people are running to safe havens, and gold, silver, and it seems, thankfully, Bitcoin are on that list. So I make, the general populace is feeling the stress, feeling the heat, and starting to wonder, how can, how can I hedge against this current set of affairs and that are so unpredictable?
Yeah, no, it's definitely interesting times right now. I think they even sell gold at Costco. I was like driving by the other day and there was a huge line out it and everyone's just like carrying gold bars. Really weird times we're in right now. Might be end of days. I don't know. Needless to say though, central banks now hold more gold than U.S. Treasuries for the first time since the 90s. So Joe, do you think that means the world's losing faith in the dollar officially, or are we just seeing a shiny little panic attack right now? What do you think how do you think this is playing out?
Look, I mean, I think to me it indicates not only is there a rush to safe havens, but for sure that safe haven that for most of my life has been the US dollar is seeming less safe to a lot of people now. And people are going to the old classics, the golds and the silvers, because those are real assets in their minds that they can actually, keep in the vault and ensure that they're hedging with something real. So to me, it indicates the global uncertainty, the global risk that everyone is feeling and seeing, and also the degrading value of the US as a hedge against anything that could be happening out there. And that should have US bankers and people who have all of their money denominated in US dollars a little bit worried. I guess that's why there are lines outside Costco to buy gold bars. And, I feel it.
Yeah, no, it definitely seems like we are witnessing the deterioration of our beloved greenbacks in real time. And from your side or seat at the table over at Zappo, Joe, do you find that clients are treating gold and Bitcoin like rivals right now, or are they more like teammates in the hard money versus fiat Olympics? What are you seeing on your end of things?
It's a great question. I mean, we, as a bank, we don't offer exposure to gold at this point. We're purely into US dollars and primarily into Bitcoin, and offer a range of products to enable you to grow your wealth regardless of how you feel about either of those two things, in the most secure way possible. What we're seeing is a definite uptick in interest in people coming to us looking to buy Bitcoin and looking for ways to not only buy it, but keep it safe and leverage it if they need to. I think one of the really cool things about Zappo Bank and one of the real differentiators of us in the market is, for sure, I want to be able to keep my money safe. I want to be able to hedge it. But imagine if you can hedge it, but also leverage it when you need to get some access to capital. And that's what we do with our Bitcoin backed loans. It's a little bit harder to do that with a gold coin that you bought at Costco and you keep under your pillow. And so Zappo's there providing you with that safety as well as a degree of utility when you need it. And we're definitely seeing a lot of user interest, a lot of market interest in being able to do that. People are definitely, and as a bank and as an institution, our history is very much rooted in markets that faced great moments of instability and continue to do so in places like Argentina. And we've always been the safest place where you can take and grow your wealth and keep it safe. So for sure, like to the rest of the world, we say we've seen this story play out many times in many different places, and Zappo Bank is that safe space that you can come to hedge.
Oh, most definitely. That's why we love you guys, amongst other reasons, of course. And, and maybe the most predictable thing that came out of this was Peter Schiff, of course, took this moment to stand up on his gold-plated soapbox to say that the dip proves that the bull market's over. If you could respond to Schiff directly, how do you explain to him why Bitcoin still wins even when gold's having its shiny little moment right now?
The things I'd like to say to Peter Schiff, where do I start? But to keep it all above board, I mean, I think I would say you're not comparing apples with apples there. We're talking about the currency, the store of value of the past, which is gold, and it has its place in the world's economy for sure. And you're comparing it to the future of finance and the future of transactions, the future of storing your wealth in a way that you can move it across the world without needing to literally move tons of metal. You can just set up a transaction and pay a couple cents and move $1 billion from country A to country B. So while bull runs come and go and Bitcoin has its cycles, I wouldn't say that we are anywhere near, from my very personal perspective, near the end of this run that we're in. And I would also say that Bitcoin dropping 20% and rebounding overnight is actually a real sign of maturity and how Bitcoin has come such a long way. The last time we saw anything close to this, and this latest crash was far bigger than the second highest, we entered a multi-year crypto winter. With the FTX crash and Terra Luna and all of those things. Here we are, $19 billion of Bitcoin trades and positions liquidated. And 24 hours later, we're back at 115K. So I'd say, Peter, you can say what you want, but clearly what we're seeing is a market and an asset that is maturing, that people have increasing confidence in, and that is built for the future, unlike gold, which is a relic of the past.
Yeah, and Joe, you bring up a really good point that I'm surprised we're not hearing more people talk about right now. We saw that flash crash. It was $19 billion liquidated in what felt like minutes. I remember checking my phone and the price was decreasing so fast, like some of the apps weren't even registering it. And I'm like, oh no, is this actually the end? Of course it wasn't. But, it did rebound within like a day. It went from 120 to I think as low as 102-ish and then back to 115. So it kind of begs the question, for the longest time, Bitcoin has been treated like a risk-on asset when Bitcoiners everywhere are saying, no, it's a safe haven akin to gold. So, what more proof do you think people need to see that, like maybe in the very short term, Bitcoin is volatile in the day, if you're looking at days, hours, maybe even a week or two, but we saw it rebound within a matter of 36 hours or something. So do you think that is really indicative of this new phase that we're seeing in Bitcoin's journey to truly being the hardest asset on the planet? I mean, yeah, short-term volatility, but unless you're a day trader, that doesn't really affect you that much, right? I mean, what is that kind of saying to you about where we are in Bitcoin's maturation process right now?
I mean, I think it says what we've been saying in our sessions is that Zappo for sure, but Bitcoin is maturing. It's becoming an asset that people can actually bank on as opposed to bet on. And I think that's a really big mindset shift that we're starting to see in the market. The fact that Bitcoin bounced from a low of 101 back up to 115 in a matter of 24 hours means that people snapped it up. They saw 101 as a real bargain, and they deployed their capital to get it, which shows that their money that is in the market continues to see Bitcoin as cheap at 101,000, whatever the bottom was. And that indicates that there's a lot more value to be unlocked in this asset class. And the fact that there's so much capital now interested in and backing it should probably also indicate that we will start to see less crazy volatility as we go further in, to the evolution of this currency into an asset and into a store of value. So for sure, to me, this is a major indicator that we are seeing the asset mature and that we are, seeing no end of demand for whatever becomes available at whatever price we can see it.
Yeah, I mean, if we needed further confirmation, at least from my end, I don't know if we'll ever get under 6 digits again, because before we even got closer to 100 itself, it got snapped up really quick. So it seems like there's a lot of buying demand around that 100K level, because people know you're probably never going to see prices like that again. And this most recent flash crash and then rebound certainly seem to be indicative of that. So I think you're right. Good tidings ahead for sure. Let's move on to our next story, Joe. I'll be back with you in just a second. But first, BlackRock's spot Bitcoin ETF IBIT has crossed the $100 billion in assets mark less than 2 years after its launch. It's officially the fastest growing ETF in history and the most profitable I told you so Larry Fink's ever had. BlackRock now holds over 804,000 BTC. That's roughly 3.8% of all Bitcoin in existence. Now, for context, Strategy owns about 640,000. So, yeah, Saylor may be the high priest, but BlackRock, they just bought the church. At peak prices last week, the stash was worth over $100 billion. Today, it's hovering around $90 billion, which means Larry Fink has lost more money in a week than most altcoins have in their entire existence, and he's still smiling. In a recent interview, Fink said the company's expanding into tokenization, turning bonds, real estate, and probably your grandma's house into blockchain assets. All right, bringing Joe back. Joe, BlackRock's Bitcoin ETF just became the fastest growing ETF in history, over $100 billion in less than 2 years. Are we witnessing Wall Street finally get it, or are they just chasing the world's most profitable bandwagon? What do you think?
I mean, I think Wall Street's always chasing the world's most profitable bandwagon, but I think the fact that that is Bitcoin at this moment shows exactly what we started with, that this is Wall Street catching on and understanding that this is not a passing fad. This is not a crazy bet that degens on Twitter are making. This is actually something which real money can flow into. I think a large part of that is also the regulatory environment that we've seen in the last couple of years, starting to become one that enables large financial institutions like the biggest asset manager in the world to structure an ETF around. And that's the kind of thing that was unimaginable 5-10 years ago. We are seeing each year that goes by greater regulatory clarity, and that gives these large financial institutions and the people who are literally managing the world's assets the space in which to actually gain exposure. And what I think the fastest ever ETF, hitting 100 billion in under 2 years, that doesn't just show that Wall Street is making its bet, but it shows that it's a good bet. It's paying off. There's appetite for it. People want it. They want that on their portfolio. And that means that I think, the fire is lit. I would assume we only see more ETFs and similar kinds of financial instruments being deployed across the board to try and lap up what seems to be increasing demand.
Yeah, no, it's really amazing when you think about how far we've come in just the last 5 or 6 years. It went from retail YOLOing, and now it's institutional accumulation. And it's just a completely different feeling and atmosphere than we experienced, like I said, only 5-6 years ago. It's pretty wild. I mean, now Larry Fink's firm BlackRock owns almost 4% of all Bitcoin. So, but it does kind of beg the question, right? Like, is that bullish for adoption, or is it slightly terrifying that the decentralized revolution is being led by the same guys who own half of everything else? I guess we kind of got to take the good with the bad, right?
For sure. And look, I mean, I think at one level we can share clearer regulation and greater, large institutional financial interest. But at the same time, we have to understand that Bitcoin is supposed to be a decentralized asset. It's not supposed to be something that anyone gains total control over. And while we're still mining new Bitcoin, and while miners are still able to fund their activities through mining new Bitcoin, I think we're probably safe. But as those rewards start to drop, and as perhaps mining becomes even more centralized than it is today, maybe we're entering into a risky area. The cool thing about Bitcoin, though, given its decentralized nature and the fact that it's open source, is that the community can respond to those fears. And through consensus, we can figure out a better way to do things if we need to. And I think that's a very powerful and a very often overlooked aspect of Bitcoin as a technology and as an asset.
Yeah, and then you think about the supply dynamics of it because, yeah, they own almost 4%, but it would be so incredibly hard for them to get much more than that because there's only so much Bitcoin to go around. And as the demand increases, as we know, number go up and so does the price. So it's going to be a lot harder for them to stack those sats on their book. So I think we're okay, but you always got to wave the warning flag with this kind of thing. BlackRock, I don't trust him, but they're not doing it because it doesn't make them money. And they're also getting into tokenization now, which is super interesting. They're turning bonds, real estate, maybe even my Mima's retirement condo into blockchain assets. So how big of a deal do you think that shift is for the future of finance? Tokenization's a pretty big deal, right?
It is a big deal, and it's interesting. I mean, having been around through the NFT craze, when everybody was blowing a couple 100,000 on a Bored Ape, which was the kind of, at some level, the first mainstream moment that tokenization had, and seeing how that collapsed into, many little Ponzi schemes effectively. I do think tokenization is a fascinating and a very interesting and a very complicated area, but it's one in which we are yet, I think, to see the regulation required to enable it to happen at scale. I'm assuming, and I'm hoping we will see a little bit more regulatory clarity on that side across the European markets and then the US markets. And I know there is a degree of it enabled under the Genius Act. But I do think that seems to be the current kind of craze outside of stablecoins is what can we tokenize and what does that mean? How does that enable us to make more money as a BlackRock, or how does that empower us as individuals to make money off of the things that we already own? So for me, it's a very interesting new area. It's a very interesting concept, but it sounds like we're starting to layer technology over things that can lead to positions that get over leveraged or positions that are, not necessarily backed by what they say they are. So it's an interesting area, and it's one that I personally have a degree of caution around because it feels quite removed from where we started as Bitcoiners. But it's one that I'm pretty fascinated in and watching closely. What are your opinions, Hank? What do you think it means?
It's interesting, but the very fact that you made a good point, and you kind of compared it to what we saw in the NFT craze with Bored Apes, that's kind of given me a little bit of pause, because I remember being in part of that world for a minute, and what an absolute dumpster fire it was, despite everybody, and rightfully so, at least at the time, screaming from the high heavens, like, these hold no intrinsic value, I can copy and paste this dumb monkey photo, and they were right. But, maybe NFTs had to crawl so real world tokenization could walk or something like that. I don't know. But you do bring up some interesting points, and that does kind of seem to be one of the hot button things that we're seeing in the industry right now. Like, I know there's, what is it? There's a company we've had here on the show that's like tokenized $1 billion worth of stuff. So people are doing it, but yeah, remains to be seen. We'll see how it all plays out. I think having a little skepticism or approaching it with a little caution right now, probably the smart move, but such is life. All right, moving on to the next story, Joe. Hang 10, because right now, corporate America, in case you didn't know, they hold more than 1 million Bitcoin. That's $117 billion worth, which means CEOs are finally figuring out what Reddit figured out a decade ago. According to a new Bitwise report, 72 public companies and ETFs collectively own over 1 million BTC after adding another 176,000 in the third quarter alone. It is the clearest sign yet that Bitcoin has gone from magic internet money to asset my board of directors can't ignore without getting sued. Leading the charge, as usual, is Strategy. Like I mentioned, it's now holding over 640,000 Bitcoin. This after buying another 40,000 in Q3. Michael Saylor basically looked at the flash crash last week, hey buddy, and said, oh, it's 12% off, I'll take a bunch of it. Other funds have followed suit, quietly stacking while retail traders argue on X about whether 112K is overbought. All right, Joe, we're bringing you back, and let's head over to camera 3, guys. I don't know if you're familiar with this website I'm going to bring up, Joe. One of my favorite websites on the entire interwebs. It's bitcointreasuries.net. Are you familiar with that website, Joe?
I have seen this before. I think with you, actually, on a previous Roxom episode, yeah.
Oh, we did bring it up with you. Okay, cool. Well, I want to bring up the charts here, guys. Are we bringing that up for us real quick? Okay, there it is. Okay, beautiful. So yeah, this, the best place on the internet to find out what your favorite public companies are up to with their Bitcoin stash. And like we said, we got, strategy here at the top, and you can click on any of these individual companies and see how it's affecting their balance books. So I guess my question is, Joe, why do you think we haven't seen more of the big names like Mag 7 companies enter this list yet? I mean, I know Tesla's up there, but they bought their Bitcoin 4 or 5 years ago. Are they waiting kind of for the first domino to fall so they can give themselves permission to join in on the fun? Or what do you think's keeping these big corporations out of it so far, for the most part?
I mean, it's a great question, but I think, even as we're saying Bitcoin is maturing, Bitcoin is becoming the kind of financial asset class that places like BlackRock are prepared to create funds around. It's still early, right? And it's good to remind ourselves of this fact from time to time, where it feels like we've, walked around the world a few times on foot and have made such progress, but we're really still at the beginning. And I think it's probably still too early for many of these large corporations to feel like it's safe enough to give themselves direct balance sheet exposure to something such as Bitcoin, especially at a time when the world economy is looking unstable and when the next best thing is something that people aren't too sure about. I see more people doubling down on AI and doubling down on those sorts of also potential bubbles as a means to try and make a buck or invest and, get a return. I don't think, though, that this is that this list is going to continue to look like this forever. And I do think that as we see things like our previous story, the fastest growing ETF of all time being the IBIT, that we will see more and more, Fortune 500 companies, more and more listed companies seeing themselves as being ready for some exposure to the asset class that is clearly driving a huge amount of consumer demand. So to be seen. I wish I was inside the minds of many of these individuals, but I do think we're early, and we'll see them pop up in maybe a couple of years' time when Bitcoin costs a couple $1 million a coin. But hopefully,
yeah, and they'll get it at the price they deserve, which is much higher because they didn't get it earlier. But it's super interesting, right? And you made a good point. You have everybody just throwing money at the wall towards AI, right? Because there's this seemingly enormous upside potential. When you could have made a similar argument you could still make it now for Bitcoin, but I almost wonder, Bitcoin is backed by math when all this other stuff is backed by kind of just potential. We don't know about AI. There's a lot of people predicting a crash, but we don't know the end game, what will eventually come of it. We know Bitcoin, it's 21 million. It'll always be that way. And the longer you hold, the more money you end up accruing as a result of Bitcoin's number go up. Yet we're still seeing so many people on the sidelines. It's really interesting because right now Bitcoin to me feels like a much safer bet than just throwing money at anything with a .ai at the end of the name. Yet we're seeing it in mass right now. So very confusing times indeed. But hey, like Michael Saylor said, you get it at the price you deserve. Let's get back to camera 1 here, gang. And another thing that was interesting about this story was they said, corporate America now holds more than 1 million BTC. And again, we're early, and there's only 21 million to go around. Right now, it's worth about $117 billion, that 1 million Bitcoin-ish. So does that surprise you, or is this just the next logical step for companies realizing that cash is the real meme coin? Would you have expected, given the regulations we've seen this year kind of put in place, the tailwinds we're experiencing, would you have expected more or less companies at this point? Or are we kind of in that mama bear moment where this is exactly where you would expect we'd be, given all the factors we've seen this year?
I think, when we talk about Bitcoin price volatility, we always say zoom out, see the bigger picture. And I think if we're thinking around corporate balance sheets with Bitcoin on them and we zoom out a little bit, we'd see just how recently this became a concept and this became a thing that more than a handful of people were talking about. So I think we're very much still at the beginning of corporate adoption. And I think when that bug really catches and when the gold rush into Bitcoin begins, that's when it's going to be a really great time to be a retail investor and holder of Bitcoin, because the supply shock that will come will be enormous. We're talking about, 1 million Bitcoin being owned already. Amazing. The other 20 million out there, some of which is lost forever and some of which hasn't been mined yet, is a very, very finite supply. And so I would say I'm not surprised that we don't see, like Microsoft and Alphabet and Meta at the top of this list just yet. But what heartens me, what makes me really excited, is to see the smaller companies that are embracing this. The companies that are, they don't have millions and billions of dollars at their disposal in terms of cash assets that are lying around, but they are taking what they have and they're buying a couple of Bitcoin and they're putting it on their balance sheet. And to me, that shows a real confidence being created at the grassroots level of entrepreneurial kind of mindsets and the industry that speaks to a groundswell of interest and wanting to really see how we can get exposure to this thing. I mean, I was reading, I think, in one of the articles that we're discussing today, that this has been the worst year for the US dollar in terms of performance against gold for an incredibly long time. And I think as we start to see more of those metrics come out, and as we maybe start to see the tariff wars and the ongoing job reports coming out of the States potentially not painting such a rosy picture of the future value of the US dollar, we will see a continued rush into safe havens. And gold is bearing the fortunes of that right now. Bitcoin has been too, and I think we'll continue to see it grow. And when that happens, and as that happens, this list will start to grow and start to look very different. So long story short, we're still early, and I think there's a lot more to come.
Yeah, and you make an interesting point because, those big corporations, it'd be so easy for Alphabet to say, here's a couple million, we're throwing into Bitcoin, it's on our balance sheet. But then you're seeing these smaller companies that also have very, very smart people who will be financial leaders of tomorrow, who have so much conviction in it, they're going all in, and the risk is so much more for them than it would be for a company like Alphabet or Microsoft just to throw a couple million in there. So it definitely is encouraging from a grassroots movement perspective and a conviction perspective of really smart people, a lot smarter than me, who are out there putting it all on the line because they believe in Bitcoin and the math associated with it. And it definitely brews a lot of inner confidence. So we definitely like to see that here. And at Zappo, Joe, you work directly with a lot of institutions and high net worth clients. Are they buying Bitcoin now because they finally understand it? Or is it more because they're terrified of missing the next big leg up? What's the vibe you're getting right now?
It's a great question, and it's an interesting one to respond to. So I definitely can't speak on behalf of all of Zappo Bank's members and customers, or in terms of our corporate strategy and what we're seeing there. But what I will say is a lot of the members that we have at Zappo have. I mean, there's a pretty interesting mix of people who've had Bitcoin for a while and have chosen Zappo as their place to keep it safe as it's grown from this little investment into this gigantic investment. Probably no safer place to keep your Bitcoin than Zappo Bank, with our, founding in 2013 and our Swiss nuclear bunkers as part of our storage via MPC. But that's besides the point. Throwing in my little pitch on the side. On the institutional side, the interest is varied, and I think at some level, whether it's a family office or a high net worth individual or an actual corporate that's looking to invest in Bitcoin, we're seeing a range of appetites. We're seeing people who are looking to hedge. We're seeing people who are looking to get on the bandwagon in case they're going to miss it, and we welcome any and all who want to come to Zappo and say, "Hey, I've got some appetite for Bitcoin, or I've got some Bitcoin that I want to grow and I want to keep safe. I want to leverage." We provide any and all of those opportunities for our users, be they retail or institutional.
Yeah, well, that's why it's the best place to bank your Bitcoin. Zappo Bank, we know it here well. And that's why we trust having you guys on the show, giving us some of the best signal in the business. We always appreciate you guys when you come on by. All right, we got another story here, Joe, so hang 10. We'll be back with you in a second, because apparently humanity's next great investment boom will last until the year 2100, and it will be powered by old people and new money. That's according to the Federal Reserve Bank of Kansas City. Their recent study shows that as the global population ages, total asset demand could rise another 200% of GDP between 2024 and 2100. That means an avalanche of capital will be hunting for yield for the next 75 years. And guess which hard, scarce digital asset is ready to catch it? Bitcoin, of course. The report says aging populations save more, live longer, and crave stable stores of value. That trend will keep real interest rates suppressed and push demand toward alternative assets like Bitcoin, which has the dual advantage of scarcity and memes. BitGet's CEO Gracie Chen predicts that within the set 75-year window, Bitcoin will be valued by retirees the way their grandparents valued gold. Right now, about 34% of crypto holders are aged 24 to 35, but as regulation and ETFs mature, older investors will join the party with much deeper pockets. Bottom line here is global wealth grows and the planet grays. Capital needs a home that can't be printed, seized, or stimulated into oblivion. And Bitcoin checks all those boxes, and it's got better branding. Moving back to Joe. Joe, the Fed says that aging populations and global wealth growth could fuel asset demand until 2100. Basically, old people are going to pump your bags. Do you buy that argument? What do you think?
You know, I actually do buy it. And I'll offer a personal anecdote. So over this last weekend, I went to visit some family who are of the boomer generation. And we were talking about crypto. We were talking about Bitcoin. And the narrative has shifted so much in the years I've been working in this industry, and went from being the crazy, relative who was in the Ponzi scheme to now being the person who actually understood a thing and, has done decently off of it. And the narrative has shifted from, wow, what's this crazy scam thing, to, oh, I think we missed the boat. I think that was an opportunity that we should have seized at the time. And I think what that shows me is a realization that Bitcoin never was a scam. And in fact, today is not, and is still something that they wish they had been able to get a part of. The next piece of the puzzle there is telling them, hey, you're not too late. It is actually still early. $100,000, $115,000 sounds expensive, but it's a hell of a lot cheaper than a couple million, and that could be where we're headed. So I think if we're able to bridge that narrative gap and say, cool, welcome to the party. I'm glad you understand that I'm not here to steal your money. But hey, it's not late. You can still get in. That's when we're going to start seeing that generational boomer wealth flow into this asset class. I think couple that with I know it's my favorite phrase on this show, but the macroeconomic uncertainty around the world, and you have boomers who are wanting to retire, who are worried that maybe those US bonds and those S&P 500 index funds won't be performing as well into the future as we had hoped. They're looking for alternatives. And so the trust that's been built up in Bitcoin, and the look and the need to hedge against what were once the safest bets on the books, definitely creates a really interesting opportunity. And I think we'll see it happening. Maybe not everyone, but certainly it's going to happen at some level.
Yeah, I mean, Bitcoin kind of feels like the Noah's Ark of the financial tsunami that we're kind of living in right now. And, reports are saying that retirees are really craving stable stores of value. So it kind of begs the question, it sounds like you're hearing it from your family a little bit. How long do you think it's going to be before we see my grandpa moving his gold into Bitcoin instead of the other way around? Are we pretty close to that, you think? Maybe another couple years? Less? I don't know.
I think it's hard to call. If I was able to call that accurately, I'd be busy placing my my long trades. But I think I think it's closer than it was, and it feels a lot closer than it felt a few years ago. I think if anything, this year and the last the years since COVID have shown us how this post World War II global order that felt so stable and felt so safe is actually on shaky ground. And there is no prosperous tomorrow guaranteed in our existing financial instruments and our existing investments. And that's opening people up to the possibility that there could be better alternatives out there. Of course, people are going back to the old faithful gold, and they will. And the price of gold will pump and may continue to do so. But gold is open to further exploration and more becoming available, and in a way that Bitcoin is not. I think the job of people like you and me and people in this industry, our audience who are listening, is to tell that story in such a way that Bitcoin isn't seen as the scary, risky thing that we missed the boat on, but as this potentially very safe alternative that you are still very early in. And that you can actually do just as good a job of hedging against inflation and devaluation of your fiat as gold and or silver. Plus, if you need to move countries, you don't have to take a couple of gold bars in your handbag. You can just, take your Trezor or move it across with your Zappo bank account.
Oh, yeah. Amen to that. I always get flagged by TSA when I'm bringing my gold bars across state lines and country lines and whatnot, too. So I can't wait for that to be over. And, Joe, at Zappo, you and the team sit at kind of the crossroads of traditional banking and Bitcoin. So my question is, how are you and the team preparing for that inevitable wave of older, wealthier clients that are going to eventually be entering the space?
We've been preparing for that from day one. Zappo Bank was ahead of its time. It was built, founded in 2013, before it was a bank, when we were more in the custodian services. And we have all of those years of expertise that we have been building up and preparing for the moment when we see this great transfer of wealth into this asset class. We've been building the safest possible way to keep your Bitcoin safe. We've got a team of experts. We've got the best possible technology. We've literally got a Swiss nuclear bunker. And we've also been building out the tools so that not only can you keep your Bitcoin safe, but you can grow it. You can earn yield on it, and you can get access to other financial instruments that perhaps you still want to have some exposure to, like the S&P 500 or like any US stock that you want to put your money into. So at Zappo Bank, we have been building the Bitcoin bank of the future that enables you to do the things that you would traditionally be doing with your fiat, but doing it in Bitcoin and doing it from more or less anywhere in the world. And quite honestly, I think if more people understood that and more people really viewed and saw what Zappo can do for them, the line would be out the door, just like the boomers queuing to buy gold.
Yeah. And I got a question. I'm very intrigued by this Swiss nuclear safe haven you got there. If you work with Zappo Bank, do you get a seat in there? Because this tariff thing with China is kind of freaking me out. And if things escalate, I need a place to go. So, or is it only for cold wallets?
I'll have to make some internal calls and we'll see what we can do, Hank. But if anyone gets a ride there, I'll make sure you're included.
I eat very little. I can take up very little space despite how big I look. So yeah, just throw that out there. I'll take any help I can get. All right, Joe, it looks like our time with you is running short today. But as always, we always really appreciate having you on the show and getting your insights and expertise. And I know our audience does. So for those that are saying, listen, I now also have a favorite Joe from Zimbabwe, what's the best place they can go to see more about what you're talking about and what you and the team at Zappo are up to?
Thanks, Hank. I mean, you can find Zappo at Zappo Bank app on X. You can find us on LinkedIn. You can find us at zappobank.com. And me personally, you can find me at Zimbo Joe with 2 E's on X. I have a pretty tiny following there, but I'm growing it day by day. Each like and subscription helps. So pull through, like and subscribe, and reach out to us. We'd love to talk if you want to become a Zappo Bank member or if you have any questions about what we can offer you.
Amazing. And I definitely encourage everyone to follow Joe over at Zappo. You're actually one of my mother's, if not, I don't want to play favorites, favorite person on the show. She's like, I love Joe. She always makes me tell her when you're coming up on the show. So you've got at least one.
I think we need to get her on at some point, and we could have like a Hank's mom and Joe segment, and I'm here for it. I'm ready.
Oh boy, that might be too much for anybody to handle, but I appreciate it. I'll let her know and see what she says. We'll kick the can on that one. All right, Joe. Well, thank you again for joining us today, and we're looking forward to having you back on the show real soon, my friend. Enjoy the rest of your week.
You too. Cheers. Thank you so much.
Cheers. All right, we're taking a quick break. We'll be back here at the Blockchain Report with more, including our second special guest of the day. And I'm not going to tell you who it is yet. I'm going to make you stick around and find out. So more Blockchain Report coming to you right after this.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Are you interested in effortlessly growing your Bitcoin portfolio? Of course you are. I mean, I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it just like any credit card. You can buy lunch, your gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee, and right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. All you gotta do is go to Gemini.com, and you can learn more there. All right, we're back with this morning's market rundown, and oh, Dios mío! Bitcoin was at 110, 111 this morning. We have dropped down to that 108, 109 level. You can see it's about a 2% drop in the last 24 hours. Remember, fam, we were down to 102 almost about 6 days ago. We popped back up to 115. So we're definitely seeing some short-term volatility right now. But number go up and to the right still seems to be very much intact. This is just a little turbulence on the way there. And we got some charts here I want to talk about that's going to help explain where we are right now with Bitcoin. So let's get started here, gang. The first chart I want to bring up here is the Bitcoin seasonality chart, all right? So this one here historically shows that September is Bitcoin's hangover month, as most of us might remember. The only one that averages a loss, and it's down about 1.3% over time. You can notice by the little bit of red right there, that's not good. But this year, September actually flipped green. It was up nearly 5.3%, which either means the cycle's maturing or somebody finally hit the sell button. Now, October historically is where things tend to heat up. As you can see here, we're averaging about 17.9% in the month of October, making it the second strongest month ever for Bitcoin. Only November beats it with a ridiculous 43.7% average return. Now, this October has been a little slow out of the gate, especially after last week's flash crash. We're down about 3% so far, and the bears are already popping champagne. Peter Schiff, I'm looking at you. But it is kind of hilarious because this is exactly the kind of it's over energy that usually comes right before Bitcoin reminds everyone why it is, in fact, Bitcoin. All right, so let's move on to our next chart, though. This is the funding rates chart, okay? And as a quick refresher, this chart measures what traders pay to keep their long or short-term positions open on perpetual futures. So when funding rates are high and positive, everyone is overly bullish, which usually means we're due for some pain. Now, when they're negative and people are leaning bearish, that's when things tend to bounce. Right now, funding rates have gone negative for the first time since July, meaning the crowd is officially scared again. And when sentiment flips that hard, it usually sets up a short squeeze where bears get their faces melted off in real time. So while most traders are busy panic tweeting, the smart money is quietly stacking. So you can take a look at that one there. Let's go to our next chart. So this is the 200-week moving average heat map, okay? So this one here basically shows when Bitcoin's overheated versus when it's cheap. The blue and purple zones historically are where the bull runs begin. Let's see, we can see those on the chart there. Yeah, so take a peek. The yellow and orange and red zones, that's where everyone's Uber driver becomes a crypto consultant. And right now, we're still deep in the blue to purple range. Or in other words, this market hasn't even come close to hitting mania yet. Every past cycle saw Bitcoin turn yellow, orange, red, then peak. This one hasn't, which means either the big move hasn't started yet, or for the first time ever, Bitcoin decided to skip the party entirely. Personally, I'm betting that the party is just fashionably late this year, but yeah, that's my take. All right, we got one more chart to show you. This last one is the market sentiment chart, all right? So right now, X is in full-blown panic mode. The top is in, it's over, see ya in 2027. But that's exactly what people were saying back in 2017, in 2020, and 2023, right before Bitcoin went vertical. We just saw $19 billion in liquidation, so fear is through the roof, which historically is when opportunity shows up wearing a clown mask. So yeah, short-term chop, absolutely. But long-term, the ingredients are still there for one more massive move before the year's end. Because remember, the masses are almost always wrong on Bitcoin, and when everyone's bearish, Bitcoin usually is just stretching its legs. So where are we right now? Well, funding rates are resetting, sentiment's a little sour, and charts are definitely cooling. And the most explosive months of the year are still dead ahead. It kind of feels like the calm before a very Bitcoin type of storm. And again, this is not financial advice, unless, of course, your financial advisor also hosts a crypto comedy show. We're taking a quick break, but we'll be back with more blockchain report after this, including our second guest of the day. So stay tuned. You'll be right back after this. All right, boys and girls, it's time for today's deep dive. And our guest today, I'm excited about this one. He is a visionary who's been building at the edge of technology for over 2 decades, from leading companies through the dot-com crash and financial crisis to writing one of the most important economic books of our time, The Price of Tomorrow. He's now leading a Bitcoin-only venture fund that's reimagining the foundation of our entire financial system. So let's give a big blockchain report welcome to the founding partner of Ego Death Capital and today's special guest, Jeff Booth, everybody. Jeff, welcome to the show. We are super pumped to have you, and so is our studio audience. How are you on this Thursday?
Great, and great to see you, Hank. Thanks for having me.
Oh, the pleasure is all ours, Jeff, and we got a lot to talk about today. So let's start at the beginning. That's usually a good spot. So, Jeff, before Ego Death and Bitcoin fame, you were leading Build Direct through dot-com chaos, the 2008 meltdown, and more. Be honest with me, after surviving that many economic near-death experiences, did the name Ego Death just feel inevitable, or how did that come about?
That's perfect. Yeah, you tend to find most of the things aren't externally caused; they're internally caused. When you look deep enough, you didn't see around corners. So most of the things you end up repeating, and you think it's somebody else. And when you're starting to blame someone else, look inside. It's typically yourself. So that's you hit the wall enough times, you tend to learn that.
Yeah, I think that sounds about right. You don't want to keep hitting that wall. And, you've spent decades advising startups, building tech companies, and watching how innovation collides with old systems. So it kind of begs the question, was there a single moment where you realized, okay, this whole economic model is broken and no one's fixing it? Did you come to that conclusion somehow through a specific event, or was that just your observations over time? Or what are your thoughts on that?
Yeah, it was an observation over about 10 years. That I joke around that if you were sitting around the campfire with me playing guitar, the previous 10 years before I wrote my book, you wouldn't want to sit around the campfire, because I would always get into this topic. Because I couldn't wrestle with, I couldn't understand that paradox with everything I was building and everything everyone else was building and I knew was using technology to make the world more efficient, and we were removing labor with that efficiency. And why weren't prices falling? So when I started to investigate the financial system, and started to kind of go through, oh my God, what this means from this financial system, what it's going to mean for everybody. At first, I started sounding the alarms. Nobody would listen. And remember, specifically, central banker in Canada, in a private conversation, he said, "What would you have us do?" I went, "Wow, that is not an answer." And so that's actually what kind of led me to I need to write this book. I didn't want to write the book. But looking at what kids would grow up in, as these collision of two forces happened to us. And most people were measuring the collision of the two forces from the system causing the pain. I realized how that would divide society, take us to big wars and everything else to reset a system that didn't have an out from that existence.
Mm-hmm. Jeff, could you do me a quick favor? I have the hearing of an octogenarian, unfortunately. Could you bring the mic just a little bit closer? I didn't bring my hearing aids today, and I just want to make sure I'm catching what you're sending me.
Better?
Yeah, thank you so much. That was great. And I apologize if you covered this a little bit. I was having a little trouble hearing the last one. But when I was doing my due diligences on you, I saw that you said you read about 50 books a year, which is amazing. I don't know how you got the time for that. But do you remember, or was there a specific one that kind of first cracked the door open to your Bitcoin curiosity? Was there anything specifically you can remember in that regard?
Nothing to specifically Bitcoin. More as I was going down the route. Now, I had bought Bitcoin prior to writing the book. I bought Bitcoin for the first time in 2017. It was a curiosity, but it was more just kind of a play. I wasn't really deep in Bitcoin. So it was more in writing the book that I started to in parallel understand Bitcoin, what Bitcoin could mean, and so buying a lot more Bitcoin and understanding that it did different level. It wasn't specifically a book. In fact, most of the books that I weren't they were business books or different books, but I hadn't read nothing on Austrian economics when I wrote my book, and so almost came to the same conclusions through a different lens, through how fast technology is.
Mm-hmm. Yeah, that seems to be a common thread when I'm talking to a lot of people in this space. You know, it takes a good amount of time for them to kind of ruminate the idea of Bitcoin and what it does in their heads till they finally get it. And then there's kind of that, you know, the term I guess now the kids are calling it the orange pill moment, right? The part where you go from researching and kind of wrapping your head around it, and then it starts to click, and you kind of say, I can never unsee this. Was there a moment like that for you as you were watching the broken financial system for years, and then you started going down the Bitcoin rabbit hole, and then it just kind of clicked? Was there a moment like that for you at all?
A series of moments, and I would say. Yeah, a series of moments. And when people say the rabbit hole, how deep the rabbit hole is, we label everybody, this is natural because in-group bias, out-group bias, we label everybody in Bitcoin as the same. They all understand Bitcoin. But the truth is there's massive varying degrees of understanding of Bitcoin, even within the Bitcoin community. So I now see it as my time influencing a world I want to see. When I first wrote the book, and I was, but when I first wrote the book and I was speaking all over the world on what was happening, the collision of these two forces and how most people were measuring it from the system, it dawned on me that 90% of my time was living in fiat land. And that created a huge hypocrisy in myself. Right? I realized I'm not just a hypocrite; I'm a massive hypocrite. And founding but because I was telling everybody what would happen. I wrote a book on what would happen. Well, I was making the system stronger by spending all my time in it, and telling myself, and then creating a hedge for myself in Bitcoin. The world was burning down by my actions. That was an epiphany. So if you said one huge moment, and that was the epiphany that made it actually said, I'm not doing this anymore. That's actually why we started the EcoDef Capital, to solve that conflict in myself. I had to move my time all into Bitcoin to be able to help influence the world I wanted to see, to bend reality to the direction that I wanted to see reality to move. And so I also, through that same thing, I understand why other people can't see, right? Because I couldn't see what I can see. I couldn't see all of the opportunity until I was fully immersed in the system, living in the system. I had a hedge, And so I watch this, and I watch this with all sorts of people. So when you say Bitcoin and everyone else, what was the moment? A whole series of moments that took me deeper and deeper and deeper to now where I try to spend as much time, spend as much money, buy as many things as I can, invest in companies, invest in the entrepreneurs building the future, building the world I want to see.
Yeah, no, that makes a lot of sense. I almost sometimes question when people say, like, I heard about Bitcoin and it clicked right away. And I'm like, well, I don't really think you fully understand Bitcoin if it clicked for you that fast. That's not really how it works, And an interesting thing I saw in your profile was you've described yourself as a campfire guitar guy. So I was wondering, like, if Bitcoin had a campfire anthem, what song would you be strumming while the fiat system burned in the background? Is there any songs immediately come to mind?
Wagon wheel. Darius Rucker, wagon wheel.
Awesome. I'm waiting for your Bitcoin themed album next on the guitar, so you'll have to let us know when that comes out. I'm very excited for that one, but date TBD. I want to talk a little bit more now about Ego Death Capital specifically. As we kind of talked about earlier, that name alone deserves its own TED Talk. It's so great. How did you and the team eventually come to that name? Because it's an interesting name and it's pretty hard to forget, but it's not exactly the first thing I would come to the top of my mind when I'm thinking of a Bitcoin, missioned business. Like, what were the conversations? Were there any other names in the running?
The name came actually from Andy and Nico, so it didn't come from me. It just fit. And I think so for a Bitcoin fund, it makes perfect sense. Because I think once you understand what has to happen in Bitcoin, in living in a world of abundance, where everybody has to play by those rules, it's imposing a new system. It also, to get there, to get to the depth of that, you have to realize that the free market only pays you by delivering value to somebody else. You can't rent seat. Right. You have to continue to provide value. But everybody wins. You're moving from a zero-sum game we've always lived in to an infinite game where everyone can win. And so to understand that difference, that we've never lived in that one system to another that you're actually inventing, creating with your time, you're participating with a whole bunch of other people. Everyone in Bitcoin is making you better. And all of their various ways to compete with each other to provide more value is making your life better too. And so to understand that, you have to almost go through your own ego death, because you have to realize all of the construct of the reality of the world that you lived in was wrong, and you were participating in that construct. And you told yourself. So here's an example of myself. I told myself that I was helping others in my business and creating value for others. But I didn't know I lived in a zero-sum game where my win had to hurt somebody in nothing. Because I was living in a system that somebody had to lose for me to win, because the monetary system was so broken. I didn't want to accept that fact. Because it's hard to challenge your own belief system. So hard because it's easy to say, I didn't know, it's too big a problem, I'm just going to bury my head in the sand. But the truth is, I didn't want to accept that fact that somebody else was hurting from me. Part of going through this path to understand Bitcoin is accepting that and then changing. And that change is partially, I would consider ego death. My own ego had to die to be able to do that. Ego death is an aspirational name, right? It's not. Mm-hmm. It's something that constantly working on to do better. I would say so. We will make mistakes. I'll make mistakes. You just have to error correct those mistakes.
Yeah, that's super interesting. I appreciate your explanation of that. It very much falls in line. Like, I could have seen like maybe Orange Pill Capital or Matrix Capital. Like, it's that kind of acceptance of realizing that everything you thought you knew might not be the way that you thought it was, and accepting that and then moving on for the right path. And it seems like, as a Bitcoiner and somebody who went or was analyzing financial systems for a long time and thought of things were one way, and it turns out Bitcoin allows them to be a very different way. Yeah, really have to accept that within yourself. So that's super interesting. And you've said that Ego Death Capital isn't trying to own the Bitcoin ecosystem, but it's trying to support its creation, which is refreshingly un-VC. So why did you and the team decide to structure it that way?
Yeah, so I've raised a bunch of venture capital in history, and I've also been a part of founding many different teams and helping teams. And venture capital in fiat land, it's in a zero-sum game. And a lot of times that venture capital pretends to help, but it's really trying to look in crypto. Like, look at what happens. It's everybody's exit. It's just about a return to be able to win in a zero-sum game. Somebody has to lose for you to win. And when you're a founder,
right, and
you raise money and you think you raise money from somebody who's going to help you, and it all looks like that, and your board meetings look like that, everything you built to try to create value for others looks like that, and you're going through this filter. I'm not going to say everyone looks like that, but when the incentives look like that, people show up like that. And so I live the other side. I understand what the founder journey looks like, how hard it is to create value in a free market, how hard it is, how many things change, what it looks like. And if you understand Bitcoin, which I hope I understand Bitcoin, then you understand that it's like a 180-degree shift from the other system. And the only way to create value is constantly creating more value for others. And that means everybody is create value, and you create margin and growth. And everybody's going to race in to compete for margin and growth. And there's no barriers. There's no barriers from a financial system like there is in Amazon, like there is in Google. And you can't those companies because of their financial system. In this system, everybody can compete with you. So you have to constantly create more value to stay winning. And so what does that look like for a VC who wants to invest in it? What it looks like for a VC who wants to invest in that is to really care about those entrepreneurs, long-term value. They won't all win, right? We might make mistakes. They might make mistakes. But it's thinking about those entrepreneurs through a life of what they're going through, and how do you support them? So it has to look completely different than the existing VC landscape because the architecture bedrock of the system is totally different.
Interesting. That's a very ambitious and exciting new model you guys are working on there. But that's not surprising. I mean, because you've worked with numerous companies in the space like Breeze and Fetty and others that are pushing real-world Bitcoin adoption. So my question for you is, what do you look for in a founder before writing the check? Are you looking for passion, vision, a little bit of mild insanity? Like, what are the key aspects you're looking for in any new founder that you're looking to potentially back?
All of the above: grit, integrity, the other words you mentioned. Somebody that really is a unique idea and sees themselves in the way to be able to provide that value to others. That and somebody that isn't to jump in and just do it, like do things and move fast. So in Bitcoin, I get asked this. Forget founders for a second, or value for a second. I get asked this all the time from people who are trying to move their time into Bitcoin, and they, what can I do? And if you just applied your genius to Bitcoin, you'll create tons of value. And here's why you'll create tons of value: because 99.9% of people in the world don't understand Bitcoin. If you understand Bitcoin, that means there's so many challenges to get them to understand Bitcoin. And what a whole bunch of people do trying to get them to understand Bitcoin is yell at them. Right? And think they're smarter. But if you take it the other way and say, 99.9% of people that are all going to learn Bitcoin, they all have to learn Bitcoin. If I provide value there in whatever thing that I'm creating genius in, it's a massive opportunity to create value. Right? Whether you're helping them self-custom, whether you're helping them learn, whether you're a podcaster, whether you're creating something like Fedi, which is bringing privacy to Bitcoin, whether you're creating something like Roxom, which is an entirely new exchange backed by Bitcoin, whether it's Breeze, which is the integration of all of the different financial, all the different rails to be open source on payment for Bitcoin, all of these things create success by solving the problems that people are worried about in Bitcoin. Right? It's so easy, and I mean it's so easy because where would you go to? You would go to where the problems are. Why would you complain about the problems if you're an entrepreneur? The problems are your opportunity.
Right. No, that's such a good point. I mean, it's still what I think they say. There's like 300 million people that own Bitcoin in the world right now, which means we've got 1/24 roughly of the market. There's so much opportunity out there if you can solve for these real world problems that are going to be very ever present as the adoption cycle continues. Yeah, there's a lot of opportunity there for anybody. But it does beg the question for me, you know, at Ego Death, you guys are a Bitcoin only investing fund, and how do you go about explaining that to traditional VCs who think diversification just means buying a dozen altcoins and hoping one moonshot? It's like, how do you reframe traditional investing around this, you know, new Bitcoin only mantra?
We don't. We do this exact same thing I just mentioned to do that entrepreneurs
Okay.
should do. We have a thesis that it's Bitcoin only. And if you have a thesis that's something else, you can do whatever you want, and the market will reward you or not reward you. What I'm seeing is the market is rewarding us, and more people are starting to understand this. Why we were able to raise a second fund oversubscribed very quickly is because of a leadership position that we take that it is only Bitcoin. Bitcoin's repricing everything. And the company and some of the companies that we're invested in are already profitable, growing extraordinarily fast, adding Bitcoin to their balance sheet every month. So you have actually you have venture returns on a venture type asset. It's not an asset; it's a protocol. But you have something Bitcoin, which is repricing the entire world and will continue to do so. All prices are falling against Bitcoin. Then you can create companies that acquire more Bitcoin by solving problems. Where else would you want to? Like, I don't want to convince fiat companies to do this. They can do whatever they want. I don't want to create crypto companies to be able to do this. I would rather more Bitcoin only funds emerge and copy this because it's a very, very successful playbook, extraordinarily successful playbook. I believe that these returns will be the highest returns that have ever happened in VC.
Yeah, no, that makes a lot of sense. I guess, like, why try to convince potential competition to enter the space when it's just kind of eating up, I guess, opportunity for you guys going forward as being, you know, more of the first mover types and getting in earlier on the Bitcoin space. I do wonder though.
Do you mind if I just there? It's not that I wouldn't want them in the space. More competition, better, right? More competition, more capital moving. Bitcoin accelerates. It's not that I don't want them in the space. It's I don't want to spend convincing them. I'm just going to do it. My job is so. I feel like I'm spending all of my time exactly where I want, right? With entrepreneurs, with other Bitcoiners, building this ecosystem. I don't want to move that time to somebody else to convince them to do what I'm doing. My time, so it's the value of my time. It's not that I don't want them in the space.
That makes sense. I appreciate the clarification on that. Yeah. Why would you change if you love what you're doing and it's going well? Yeah, that doesn't seem like a good use of your time at this juncture. And I want to talk a little bit about Ego Death's tagline. It talks about building a financial layer that brings truth, hope, and abundance. Which of those three do you think the world's really missing the most of right now that you're hoping to bring to the masses over at Ego Death?
It's all three combined. And so, I gave a speech in Madeira a couple of years ago where I used an example of the printing press changing a structure and allowing people to both read knowledge and contribute their knowledge and error correct for the first time before. So before that, history always looked, the leaders told you what to do, slaves, leaders, there were very few leaders, mostly slaves. You had to get your information from the king, queen, churches, whatever. And the printing press opened up more knowledge. Out of that more knowledge sharing, Michael Faraday went to work at a bookbinder so he could read a bunch of the world's knowledge at the time. Michael Faraday went on to become one of the most important scientists of that time, and he visioned electromagnetism. Right? Couldn't measure it specifically at the time. He had this idea what electromagnetism would look like. And then James Clerk Maxwell, years later, took the exact same what Michael Faraday had in a vision and put it to math. It runs all of our communications, all our satellites, and all of this today. Right? Perfect math. So something that was always all around us, almost an infinite ability that was unlocked by somebody's mind, because that mind was unlocked because they now had an ability to participate. So now fast forward to today, and we probably have 7.5 billion people as modern day slaves, 500 million people. Mm-hmm. So it looks very similar to how it's always looked. A control structure, 7.5 billion people that can't actually imagine what the world looks like because living in day-to-day poverty is stuck into the system. But on a system of truth, and that's why I'm specifically saying all of the above, in a system where you can't cheat and you're playing an infinite game, every one of those minds can move from this system to a new system and unlock their minds and contribute to us. Their contribution means prices fall faster and faster and faster for everybody. Their contribution, so it will turn into 8 billion people in service of 8 billion people instead of 500 million people, 7.5 billion in service of those people. Right? And everyone, it's not the people who are at the top of the system today think the world that has to look like this in the zero-sum game for them to. They won't be able to rent seek anymore. They'll have to contribute value. But how different that world looks than the world that we've always lived in is so hard to wrap around if you're measuring from the past, because the past is the anchor. Right. Yeah, it's impossible to actually see that from the past. But we're so stuck in our past that we can't see that this is true. This is true for sure. If Bitcoin stays decentralized and secure, it is imposing a new system where it would be 8 billion people in service of 8 billion people. And so anyone who's in Bitcoin right now, especially contributing Bitcoin, building on Bitcoin, building on Milestone, spending in Bitcoin, those people are in the first free market that ever existed. First one that's
interesting. Yeah. Go ahead.
Just the first one that's ever existed. There were local free markets. There were the U.S. created the U.S. empire by having individual rights and freedoms. People moved from Europe and other places to take advantage of the free market. And the free market is more powerful, more minds. But then that system which was in the late 1800s, it was called the Great Deflation, where you had a rising middle class, more and more prosperity, which that system was then captured by banking in 1913, which then takes us back to the same zero-sum game. And so the system, we've always repeated a pattern and throughout history. So it's easy for your brain to fall into that pattern and stay in that pattern, thinking prices go up, thinking that the prices are supposed to go up, and living in that system where you know they're not supposed to go up, but you play all your time in that system anyways. Bitcoin's repricing it up. So Bitcoin is literally the first global, if it stays decentralized and secure, which I believe it will, it imposes this new discipline around the world. And how early we are in that understanding is breathtaking.
Yeah, it certainly feels like that. And, you know, you talk about this new system that we're entering with Bitcoin, but this would, at least in my generation, seem like the second time that we're entering a new system. As you know, you've actually compared Bitcoin's current stage to back in the early internet era, you know, the time when people were like, who even needs one of these emails anyway? I can just write a letter. So it begs the question, Jeff, what parallels are you seeing between that time in the early internet era and where we are right now in Bitcoin's adoption?
So when I actually compare the internet, I'm actually comparing to TCP/IP, the early internet before HTTP.
Okay.
Bitcoin, when people are representing Bitcoin as an asset, what they're really comparing is the very nugget of the first layer of the protocol, the decentralization and security. The layers that get built on top that extend the functionality, just like in the internet, that then opened up all the applications on top in 1989. So you're measuring from 1989, and then all of what the internet looked like. And most people misunderstood the internet in 1989. Couldn't see what was going to happen. Go back to when it started. It was 1969 by DARPA. And the layers, and why that would be hard to see. By the way, same thing in core debate. What ends up happening is these are all connected. Why it's hard to see is we think in terms and technologies because we see technology more. And technologies are winner take most until a new technology replaces it, which is winner take most again. But protocols are winner take all. And protocols come in layers. And because they come in layers and everybody wants them to do more, and everybody wants to change that. So there would be a natural incentive in a market to, I have a better Bitcoin, right? I want it to do something else. I need Bitcoin at the base layer to do more things because I can't see those things are going to be solved in a better design on a different level. So what you're seeing, all of the fighting and everything else as the layers move up and you add privacy through Pediment, eCash and others. You add payments through Breeze, Lightning, Arc, Spark, all of these Liquid. You add identity and you add privacy and identity through things like Nostr. All of these different layers of these things move in and provide different value in different areas. Whereas a bunch of people I need to do this right now in the base layer, so I need it to do more. So this would naturally look like this because we don't see protocols very often, and we don't see how they emerge and the winner take all and the right application moves to a different thing, or the right application. It doesn't have to happen at this.
And Jeff, as we enter this new system, I can't help but notice the roster and the team you have built over at EcoDeath Capital. It's kind of like an Avengers of the Bitcoin community. You, Lynn Alden, Preston Pish. How did that all come together where you guys decided to form the company? What was that process like?
So it was actually Nico and Andy at first. So I was mentoring Nico chagrin in his process business. I met him at a summit, and when I really wanted to move my time to Poland to Bitcoin, and he came to me and said, "We're ready to started this fund." So we went out and created this, and then Lynn and Preston were good friends, and so I asked them to be advisors of the first fund, and they loved it so much that they then joined the second fund as GPs. But it's when you say the Avengers, it's working with people that you just massively admire, and each makes you sharper in the conversations. That's a ton of it.
Yeah. All right. So I think we're running short in our time today, though, with you, Jeff. But we want to do one thing that we do on every episode with all of our favorite guests. Can we go to camera 3 really quick here, guys? So what we do, I would hope you'll humor me for a sec. We play a quick game. You know, this has been a wild year for Bitcoin, and everybody's saying to the moon, what's it going to be at the end of the year? So for fun, we decided to make a little game around it. So on the right side of the screen here, you'll see we have our price predictions of some of our favorite guests on the show of where they think Bitcoin's going to be when the clock strikes midnight, December 31st of 2025. You can see on the lower and more conservative end, we had myself at 142, Grant Cardone at 134, and then we have as high right now as Knut Svanholm in the 440s. For fun's sake, and what would you think the Bitcoin price is going to be at the end of this year? And I want to raise the stakes. The winner, we're sending a personalized Roxom Patagonia to. It'll be a 1 of 1. So for fun, where do you think we'll be at the end of this year?
I don't want to answer this question because because here's why. Because it forces you into the fiat lens. Everybody who's Bitcoin in the price of the US dollar is unnaturally reinforcing that they live in fiat. Prices fall, all prices fall. And I could say I could throw out a number, but I hate throwing out numbers because of just that. The free market is deflationary, period. Natural state of the free market is deflation. Prices fall in Bitcoin, period. You shouldn't take Bitcoin to a piece of paper to then measure prices.
Mm-hmm. Well, I respect you sticking to your guns on that one, so I totally feel you on that one. I can't give you the Patagonia, unfortunately, but I appreciate a man of his conviction with his conviction like that, so no worries there. Well, Jeff, I got to say, it's been so fun having you on the show today. We really appreciate you lending your time, expertise, and insights us to here on the Blockchain Report. And I'm sure that you've made a lot of new fans from our audience today who want to learn more about you and Ego Death Capital and what you and the team are up to. Is there a good place I can send them to if they want to check out more?
jeffbooth.ca or Ego Death Capital. And before you...
Jeff, thank you. Oh, go ahead. Yeah.
Before you follow social media, please check. So I'm not on Twitter anymore. I'm just on Nostr. And check the In Hub on my website to check the press so you don't follow a scam.
Yeah, a lot of scams out there. Good words. Appreciate that. So, all right, Jeff. Well, thank you so much for your time today, and I hope you have an enjoyable rest of your week, my friend.
Thanks, Hank.
Cheers. All right, we're taking a break. We'll be back with more Blockchain Report and today's top news right after this, so stay tuned. Do you wish you could grab cash without selling your Bitcoin? Yeah, same. But hey, that's why Ledn exists. They're the global leader in Bitcoin-backed loans. Over $9 billion issued since 2018 with a perfect record protecting client assets. Now, what makes a Ledn loan different, you ask? Well, with custody loans, your collateral stays put. They don't go degen and lend it out for yield. There are no credit checks. It funds in under 6 hours. No monthly payments. You can repay anytime with 0 penalties. And for transparency grown-ups actually want, proof of reserves reports every 6 months, verified by a top accounting firm. Bottom line is Ledn lets Bitcoin holders unlock liquidity without selling. You can check it out at ledn.io/RoxomTV. That's ledn.io/RoxomTV. All right, we got a couple of more stories in today's bull run, so let's get into it, gang. President Trump's $20 billion bailout of Argentina has everyone asking the same question. Why are U.S. taxpayers footing the bill to help a foreign country while many Americans are struggling to pay their bills? Trump told reporters, "We just want to see Argentina do well," which is a nice sentiment, except Argentina's economy is collapsing and American farmers are watching China buy from Argentina and Brazil instead of them. Secretary of Treasury Scott Bessent insists it's not a bailout. He calls it a credit line. But those credit lines are funded by U.S. taxpayer dollars, and the Treasury still hasn't published any details on how or when they'll get paid back. So why is Trump doing this? Well, because he likes Milei, and the libertarian president of Argentina, known for his chainsaw photo op with Elon Musk, and his obsession with cutting government spending. There it is, you psycho. Trump called Milei a great leader and said the deal is about supporting a, quote, great philosophy. So I guess that's it. In other news, airports around the U.S. are grounding a new Homeland Security video starring Kristi Noem because apparently no one wants to watch political ads while taking off their shoes. The Department of Homeland Security rolled out the video of Noem blaming Democrats for the current government shutdown and its impact on TSA operations. Airports in New York, Chicago, Las Vegas, Charlotte, Phoenix, Seattle, and Atlanta all said, "We're going to take a hard pass." Now, Noem's video blames Democrats for refusing to fund the government, saying it's why most TSA employees are working without pay. Airport officials say it violates rules against politically partisan messages. Meanwhile, 61,000 of the TSA's 64,000 employees are still on duty through the shutdown because apparently security doesn't qualify as optional spending. And the U.S. passport has officially fallen out of the top 10 most powerful in the world. This is for the first time in nearly 2 decades. We were number 1 just 10 years ago, then 7th, then 10th, and now 12th. At this rate, we'll be sharing a rank with Uruguay by 2030, and nobody wants that. Singapore tops the list with visa-free access to 193 destinations, followed by South Korea and Japan. The U.S., only 180. Henley and Partners says the decline signals a fundamental shift in global mobility and soft power dynamics. Or, in other words, the world's getting more open and America's not invited to the party. Countries like Brazil have revoked visa-free travel for Americans after we refused to reciprocate. Others, like China and Vietnam, never offered it to begin with. Experts say the trend reflects a broader isolationist mindset in U.S. policy, a slow retreat from global cooperation that's now showing up in our passports. So the country that once bragged about freedom of movement now needs paperwork to go on vacation. Bitcoiners might call that poetic justice because the most powerful passport in the world still can't cross borders as easily as a 12-word seed phrase. And Jeff Bezos is officially selling off Amazon faster than he's selling tickets into space. For the first time in Amazon's history, Bezos now owns less than 10% of the company that he founded. According to new SEC filings, his stake has dropped to 9%, down from 43% when Amazon went public back in 1997. He sold more than 100 million shares over just the past year, cashing in roughly $10 billion in total, though the exact figure depends on timing. That's one way to fund a few rocket launches and a Tuscan wedding if I've ever seen one. Bezos has also donated over 500,000 shares to charity, proving you can give back and still afford your own space program. Meanwhile, Andy Jassy, the man now steering Amazon, has leaned deeper into media and entertainment, locking in NFL and NBA streaming deals. Outside Amazon, Bezos is focusing on the Washington Post, which he says he plans to save again. Apparently from itself and on his rocket company, Blue Origin, which continues to chase SpaceX while burning money like rocket fuel. Oh, and yeah, he also married Lauren Sanchez earlier this year in Venice with a guest list so elite it probably required its own GDP. For investors, Bezos' sell-off signals confidence in diversification, or maybe just boredom with trillion-dollar valuations. Either way, it's another reminder that the titans of tech are cashing out of their own empires while Bitcoiners keep stacking sats. We're taking a break, but when we're back, we're going to wrap up today's show with a little bullish, bearish, or BS, so stay tuned. We'll be back right after this. All right, welcome back. It's time we wrap up today's show with a little bullish, bearish, or BS. This is the part where we recap today's top stories and see how they are making things look for our beloved Bitcoin going forward. Let's get into it. First story, the U.S. has officially entered a trade war with China after Trump slapped 100% tariffs on imports, including a 57% tariff on Bitcoin mining rigs made in China. Customs officials are even seizing rigs at ports, mistaking them for illegal radio devices. I'm calling bearish on this one. Yeah, higher tariffs mean higher hardware costs, which hit miners' margins and could slow network expansion in the short term. But long term, it's a setup for decentralization. Manufacturing and mining diversify, and Bitcoin only gets stronger. So pain now, power later. So I'm short-term bearish, but long-term, I'm actually feeling a little bullish about it. But we're calling bearish for the day. Next up, we got President Trump confirmed he's given the CIA permission to conduct covert operations and lethal action in Venezuela, while the Pentagon drafts ground strike plans. 10,000 U.S. troops are already in the region, and the world collectively asked, wait, again? Oof, I'm calling bullish on this one. I mean, geopolitical chaos has always been Bitcoin's best marketing department. Instability, sanctions, and oil drama all push investors toward the one asset that doesn't answer to governments, and that, of course, is Bitcoin. So more global tension, well, that equals more demand for sovereign money, baby. So I'm feeling bullish. All right, one bearish, one bullish, one to go. Last up, gold just hit a record high of $4,200 an ounce, its highest price ever, as people line up outside bullion shops like it's the iPhone 1 launch. Central banks now hold more gold than U.S. treasuries for the first time since the 90s, proving that trust in the dollar is crumbling. Of course, I'm calling bullish on this one. I mean, when gold rallies this hard, it's not a win for metal. It's a warning for money. And Bitcoin is the digital evolution of that same thesis. Store value, skip storage fees, and skip lines. So boomers buy gold, the rest of us, well, we just stack sats. So I'm feeling bullish on that. So today's recap, our trade war with China, I'm bearish on that. CAA ops in Venezuela, I'm bullish on that one. And gold's at an all-time high. Well, high tide raises all boats, my friends, so I'm bullish on that as well. So today's overall diagnosis, 2 bullish, 1 bearish, 0 BS. It is a bullish day here, gang. I mean, global tension and economic mistrust are pushing people out of fiat and into hard assets. Gold's record high and Bitcoin's resilience show capital is looking for safety, not promises. If the world's on fire, Bitcoin isn't running for cover, it's selling the fire insurance. So, feeling good today, and I'm feeling good as we move forward through Q4. I think October is still firmly intact. Let's not believe the FUD. Well, gang, that is a wrap for another episode of the Blockchain Report. As always, thank you for tuning in, and if you haven't already, just do me a Just Dance Vance pretty please favor, and make sure to like, follow, and subscribe to RoxomTV, Hank at RoxomTV, and the Blockchain Report on all platforms you choose to doom scroll on, and we will be back tomorrow, same time, same place, to wrap up the week with more crypto chaos and Bitcoin bedlam. Until then, and as always, make sure you're staying safe out there, you're staying bullish, and as always, make sure to hodl on. See you next week, or see you tomorrow.